Fantastic, fantastic, fantastic. Just another week, a little bit more than $1 a day. So let's get right into this. This, of course, is the highlight of the whole presentation. From here on, it is all downhill. All right, let's take a look at this. S&P, you can see it was not a good week for the S&P, a kind of a normal retracement. But notice that the purple predictor was weaker than the price action. And what that means is that the smart money was liquidating their positions. They were kind of saying, okay, that's it. We've gotten the market up to a high valuation. Time for us to take some profits. So they kind of bailed out a little bit, and I don't really like that. Let's take a look over here at the Dow. Kind of a weird thing. It's almost like the buying pressure, which is the green line, and the red line, which is selling pressure, both went down. Still buying pressure winning the day, but look, it's still bullish. What can I say? Over at the NASDAQ, we went from being microscopically bullish on the purple predictor to microscopically bearish. But you can see we've gotten down to these old highs around 7,900. So we should see the market turn up. And this week should be a good week for the market, mainly, I think, in the NASDAQ, but also in the S&P and Dow. So I think this is has been a normal retracement in a normal bull market. All right, seasonality. Our seasonality indicator is still on a buy signal and has been now for months. If it breaks below 164, I'll switch to neutral on seasonality. According to Stock Trader's Almanac, you can see we're almost to the low of the year, which is around the 1st of October. And then you can see they're looking for a rally of, on average, about 8% in the last 3 months. That's a pretty nice rally. And what happens, by the way, when we say 8% rally, that includes all the down years. So you kind of have to look at it this way. If it's an up year, it's going to rally more than 8%. Okay, so let's say 10 or 12%. That's a pretty strong rally. Ned Davis, probably methodologically better. Same thing, looking for that low in October, and then a nice strong up move. Now, he's got it kind of more choppy than Stock Trader's Almanac, but the point is the fourth quarter looks very good for us. The yield curve, dribbling, we talked a lot about this recently, so I won't go into it, but you can see we're kind of bouncing around that 75-point level. Asset allocation, we rallied pretty strongly last week, and then this week we've just kind of hovered at those highs. So no new cash coming into the stock market from asset allocation. In other words, it's not coming from the bond market. And you can see that they still don't want to take a lot of risk. So our risk indicator went down. Now remember, I showed you when we looked at the indexes themselves, I showed you that the purple predictor, they were taking profits there. In other words, I think what they're taking profits, that's a sign of conservatism. They're moving into more conservative sectors, also a form of conservatism. Global shares, who cares? We're at the same price we were at the beginning of the year, so really, who cares? I only like to trade big bulls and big bears. This has been a disappointment to me because our indicators suggest that we should be bullish. Look, our indicators work fantastic. You see me week in and week out tell you where the market's going to go. This one hasn't worked so good. Purple predictor, very bearish. Our indicators, well, let's take a look at them. The indicators had been suggesting lower interest rates. So let's take a look. Let's break this one down a little bit. The green line is the 10-year Treasury yield. And you can see it's been pretty stable at a pretty high level. Now, the chart is the CRB, or Commodity Research Bureau. It's an index of commodities, and it's a leading indicator of interest rates. And you can see it's been pointing down or suggesting lower interest rates. Then we look at the gold line. That's the price of gold. It's pointing down, suggesting lower interest rates. But the most important one of all is the blue line, which is 10-year treasuries in Germany. Now, that one has stabilized. But notice it's stabilized after peaking in January. January is when German interest rates peaked. U.S. interest rates peaked at the beginning of May. So I expected that the German interest rates would lead the U.S. interest rates down, particularly when combined with the weak CRB and gold. Hasn't really happened. 'Hasn't 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 really we're kind of now in I showed you the bounce back. We broke down these lows back in early August. We rallied back up to the breakout level here in late August, and now we're drifting lower. I think that kind of makes the most sense, but let's look at our indicators. The top indicator is the euro versus the dollar, pretty stable. The CRB index is the middle one, pretty stable. And the one down at the bottom is the yen, and it's pretty stable. So it looks to me like gold will probably stabilize at these current levels. Oil, like I say, I'm not interested. It's in a gigantic trading range. Boring. Bitcoin, though, is kind of interesting because we had two pretty sharp down days this last week. And notice that the purple predictor, which had been, I thought we'd get up over 8,000, maybe to 8,100. The purple predictor kind of collapsed and is leading the market down. So we should really expect a retest now of 5,800. Remember, there are no fundamentals for this thing at all. I mean, it's air. So the only fundamental is the cost of electricity and computing power to produce another Bitcoin. And that's down around $4,000 or $5,000. So we need to get down to $4,000 or $5,000 before we start to choke off the supply of new Bitcoins. All right, freebies. Don't forget, we got a ton of courses coming up here. Notice we got 2 in September. I think they're basically sold out, the 2 in September. We still have seats for the October Option Success School and the Dubai events. We haven't really announced the date for the January Extreme Profits, but the Futures and Forex Trading Masterclass, we still have seats available in Dubai for that as well. So if you're interested, contact us and see what we still have available, but I'm pretty sure we don't have much available for the September ones. All right, all you freebies, and if you want to get great trade ideas and stuff, go to Stock Butler. You can't go wrong. He does a great job. He's a student of mine who programmed this site, which is frankly remarkable. All right, freebies, we'll talk to you next week. Fully paid up members, because you are so super cool, we got so much more for you. I think every one of our trades is making money except the bond market. That's the only one where we're suffering. But the rest of them, dynamite profits. All right. Freebies, see you later. Fully paid up members, hang in there for just a second.